Hello everyone and welcome to Day Trader S&P 500. Today is Thursday, July 1st, 2021. This is Dale Woodson, editor of Woodson Wave Report. You can see our honor roll top 10 market timers of the year from Timer Digest and our disclaimer there. I want to let you guys know about our subscription service. We have an annual subscription, a monthly subscription, and probably next week we'll have a major announcement for YouTube subscribers exclusively. Just wanted to give you guys a preview of that. Also want to let you know that we appreciate you guys hitting that subscribe button. Don't forget the reminder bell and the like button at the bottom. And if it didn't pop up, we have a picture of it here. It looks like that. Thank you guys for all your patronage to the channel. We've got a lot to cover today. Let's get into it with we're going to look at the S&P, we're going to look at Tesla, we're going to look at gold, we're going to look at treasuries. What else are we going to look at here? We're going to look at, I think that's about it, the NASDAQ too. Let's get right into the S&P. We have a turn date of today, July 1st. We have another one later in the month, but we want to get out in front of it. So we're doing this at an unusual time. It's not quite an hour into the trading day. On the S&P, we're looking at a 1-hour chart here. We're looking for 5 waves up from this March 4th low. You can see wave 1 up there, wave 2 down there, wave 3 up there, wave 4 to here. And we've had a price target of 43.17 on the S&P. We're almost there, and there's a turn date of July 1st. We'll get into that shortly. But that's what we're looking at here on the near term. All right, this is a 1-hour chart. Let me get into that S&P. Let's see if we have it down here somewhere. S&P, there we go. As far as price is concerned, you see 5 equals 1 at 43.17. The wave count is in purple there. The S&P is turning on 2 different Fibonacci time spirals. One from the March 4 low, you can see that's in black. Another one from the May 7th high, you can see that's in red. Both of these time spirals are catching the turning points, and you can see both of them caught the June 1st one. The spiral from the May 5th high shows the next turning point as July 1 today. So we may expect the market to hit that high today and then do a little pullback. The next one in the sequence is July 26th. That's from this 3-4 low. You can see on these the slippage is virtually nothing on all these dates. You can see the 317 high caught, direct hit, 325 low caught, direct hit. Next one was 47, caught, direct hit. Next one 429, missed it by a minute. 428 was the turn date. At the opening minute, made a new high on the 29th and then went down from there. And then it caught 6-1 from there. And then the other one from May 7th, you can see it caught the 512 low with no slippage. The next one was 515, which was a Saturday. So it did the best it could because the market's closed on Saturday. It topped on 514 and so on. You got 19 was off by a day. And then we had the 610, which was off by 3 trading days. And the next turn date in the sequence is July 1st. So we're looking for something ahead of the payrolls instead of like most of those experts on TV that wait for the news and then watch the market turn and say that's why it turned. We look for the dates and look for the news to be used for an excuse or a reason why the market turned before it turns. So we're looking for a turn date of July 1 and another one of July 26. This has been marking highs, so we expect the next one of 7-1 to mark a high and then a pullback, as all these have had several pullbacks. Okay, that's it with the S&P. I want to move on to Tesla. There's several different wave counts here with Tesla. We're looking at a daily chart. We're looking at the January high of 900, and then we have 5 waves down for wave A into the March 5th low. That date should ring a bell because we had a March 4 low in the S&P. Okay, that's A up. You can see in the black parentheses that's A down in black parentheses, B up into the April 14th high. And then we have another 5 waves down into here, into the May 19 low, and then a move up. Okay, you can see here I've got an A, B, C for wave 2. This is 1 of C. This is 2 of C. Conveniently stopped right on the 618 retracement. I want to show you guys a completely different count because of this move from this May 19 low. You can see I got an A, B, C, and a 2 in black. But in red, I have an alternate count, which is a 1 up, a 2 down, a 3 up, and this looks like a 4. If this was done, this would accelerate into a third wave, and it hasn't yet. So I want to alert you guys to a possible another alternate count, okay? And I'm going to do it like this, okay? Let's just say that's A there, B and C over here. But what we could do, we're looking for C to gain equality with A at 418. I didn't want to move those. I'm going to leave them there. What I meant to do was this. My apologies. It's possible that the entire 5 down, 3 up, 5 down is done here at a near double bottom. You can see the low there was 546, and the low here is 539. Let me make sure I got that right. Yeah, 546. So it could be an A, B, C virtual double bottom, and then we have a 1, 2, 3, 4, 5 up to start a new 5-wave advance, and the correction is over from the January high to the May 19 low. That's another possibility, and what alerted me to that was this price action here. This looks like a 4, long and sideways. If we get another move up into 5, that will verify 5 waves up and signal that it's very possible that the correction ended on the May 19th low. So there's several different counts here. I'm going to move these back for my own good because I moved the wrong A, B, C. My apologies there. That was A, that was B, and that was C up here. Okay, so we're going to watch this. Our key parameters here are this low here at, was it 546? And in this high here. If the correction is over at that May 19th low, then Tesla will break above this 780 high on April 14th. Okay, we have another potential stopping point for this retracement at 731. So there's several counts in play. We have our make or break points on the upside and the downside in the near term. We're looking at 780 to the upside and 546 for the downside. Watch this play out. An acceleration down, and C is going down to 418. An acceleration up, and we'll have 5 waves up and a correction, and that'll be a good entry point if it's going higher. I wanted to alert you guys to that. I think I have that also. Yeah, right here on, you can see that A, B, C, or 1 in red, 2, I think it's off the screen. There it is there, A, B, C. And then we've got in red 1, 2, 3, 4, and 5. You can see the pullback levels for 4 here. It has not reached quite the 382, which is 647. But we're going to watch this. This looks like a 4th wave sideways triangle to me. We'll see how that plays out. Okay, I want to look at gold. Gold, we were looking for a 5-wave advance and a pullback to resume our long position for our Woodson Wave Report subscribers, and we got it. And right when it hit, I think around the 618, we resumed a long position. But this correction did not look impulsive to the downside from the all-time high. This looks impulsive. There's those 5-wave advance. There's the pullback. Where are we wrong? Where's our make or break parameters? Right here, the 678 low, a break below this, and we're going lower. Conversely, a move up will confirm this count that we see right here above that 1917 high. So we'll watch this decline, and there's our make or break points there to the upside and to the downside in gold. I believe I have a chart of that here. There we go with all the targets. Okay, there's the all-time high, A, B, C down. Correction complete. 5 waves up for 1. There's wave 2. The 618 was 1769. I threw the Fibonacci 786 retracement target of 1729 in there. If 2 is complete at this low, wave 3 targets are 1989 and 2136. So that's it with gold. Let me see. I think I'll do the rest of these here with my charts. Want to look at the NASDAQ. NASDAQ's turning on Fibonacci time spirals from the April 29 high. And again, this has virtually no slippage. The first target date 5-4, direct hit. Next one 5-7, direct hit. Next one 5-12, direct hit. The next one 5-20. There was a low a day in front of it and a high a day below it. So it was within 1 day either way. The next one was 623. We hit a high on 624. Minus 1 day, you could even extrapolate that out to 629 and say it was off by 5 days. But we'll watch that. But the key is the next turn date in the NASDAQ is July 27, which is 1 day away from the second turn date in the S&P, which I believe was 7/26. Next turn date in the sequence, 7/27. There we have with the NASDAQ. Let me see what else we have here for you guys. We had gold, NASDAQ, the Dow. The Dow hasn't surpassed its all-time high. It's lagging the other indexes so far to date. The May 10th all-time high still exists. You can see a 1 down here. This 2 up, if it's the correct count, retraced a Fibonacci 786. Another, it looks like the third wave is subdividing. Another 1 down, and this 2 up retraced 786 of this. As long as this high holds here, this count is good. Make or break for this internal wave 3 is this wave high here, and for the entire count, it's the all-time high on May 1st. If this high holds, you can see our targets for the larger wave 3 here are 33,234 and 32,231. That's it on the Dow. What else do we have here? Oops, let's get over to here. We did Tesla. There we go. See you guys there with all the things in Tesla. I think we covered it all in the live chart. Let's get back into the other ones here. Gold, bonds. This is a 10-year yield. Yield goes inverse of prices, okay? So in March of 2020, the bear market in yield, lower rates ended. It was from the 70s, a 49-year, or was it 39? Year bear market. So you can see that spike low that ended that long-term trend. We have a 1 up, a 2 down. Third wave is subdividing into 1 up, 2 down, 3 up. Here's our 4 here. Here's our targets for the fourth wave. We're looking at interest rates at a 1.409. It's already been achieved. The Fibonacci 50% gives us a 1.295%, and a 618 is a 1.182. Once this is complete, we'll get a 5 up, and it's onward and upward with interest rates for who knows how long, because we had a multi-decade long trend end last year at 0.333% on the 10-year. I want to get out into the, let's get them over here, into the 30-year, okay, and this is the opposite. This has the prices, okay, and there is that March 2020 high that ended decades long, and now we're going in the other way with prices. Prices down, yields or interest rates up. You can see we have a 1 down, a 2 up. We have 3 completed here, and here's our fourth wave targets. These will be opposite. These will be up because we're looking at prices. You can see it hit the 236 here. You can see the 382 is at 165. These are the near-term futures, T-bond 30-year futures. And our 50% is 168. 618 is 172. That's the wave 4 targets. Once achieved, we'll get a wave 5 down to lower prices and higher yields. Let's see, was there anything else we wanted to cover here? Oh, just for the bigger picture here, I wanted to give you guys an overview from the 1987 low. You can see I've 1 up, a 2 correction here into 2009, and then a wave 3 up into 2018. We caught this expanding triangle fourth wave. This triangle fourth wave that ended in March of 2020 corrected this advance from the 2009 low. So this 4 corrected 3. From that 2020 low, we have 1 of 5 up, or possibly wave 5. You can see our corrections there, and you can see this whole advance excuse me, has lasted a Fibonacci 34 years from here to here. So this high, when it's in, could be as early as July, will either just correct this, or I doubt it would correct this from 2009 because the triangle already did, or it could correct a move from 2000 high or as much as the 1987 low. But we're looking for a correction of at least this March 2020 low, and as you saw on the nearer term, more near term, we're looking at first we need a correction of this 5-wave advance, and there's our ideal price target of 43.17, and our time targets are looking at July 1 today, or possibly July 26 or 27. Thank you guys again. Appreciate all the support, and until next time, take care everyone.